So effectively under these changes, businesses will be required to hold an Australian credit licence. They will be forced to comply with a scalable version of responsible lending obligations. And effectively that means understanding a customer's financial position and ensuring they're able to afford the repayments prior to providing your services.
Welcome to the ASX Investor channel. The buy now pay later sector has been on a roller coaster the past few years, from the pandemic highs to a downturn with many of the other technology names. Many of these BNPL companies are working towards a pathway to profitability, and Zipco is one of these names. There's been significant news over the past couple of days with federal government regulation coming in for the BNPL sector. Today, we're welcoming to the channel the co-founder and global chief operating officer of Zipco, Peter Gray. Peter, welcome to the channel, mate.
Great to be here. Thank you.
Of course, there is a lot for us to discuss. We'll definitely talk about the changes in the regulatory environment and everything playing out with the pathway to profitability. But I think maybe an interesting place to start might be with the changing market conditions. Of course, we know the macroeconomic environment's been a fascinating one, cost of living, rising interest rates. But where are you thinking things are currently positioned? And also, how are you perceiving things from the Zipco perspective?
Yeah, so it's slightly different for us in each of the different markets within which we play. I think in a market like Australia, we're probably a little bit further behind in terms of a market deterioration on the consumer side than the US business. We have started to see a slight softening in terms of credit performance as the cost of living and interest rate rises do take an impact. And I think the performance is largely in line with that, what we've seen in mortgages, personal loans and credit cards. So it's a broader consumer thematic. And obviously we're taking steps to manage that. In a market like the US, we've been very disciplined with regards to our risk management and credit settings of the understanding that contributes significantly to the bottom line, and obviously the objective to bring the US business to profitability by the end of this financial year, leading to group profitability in early FY24, has really delivered some very strong improvements there. So I think in terms of the credit, we have a very close eye on the management side of that. But I think what we have seen and where opportunity becomes available for Zip is we can become more meaningful for both consumers and merchants. So consumers, particularly in Australia, are looking for ways to manage increasing cost of living pressures, and the fact that our account-based concept provides a great budgeting tool for customers to continue to manage those expenses is leading to higher levels of engagement. We continue to deliver or receive high levels of trust from our customers, and that will be very important in the next stage of growth for Zip. But also on the merchant side, I think they're largely speaking, being slightly challenged by the external environment in terms of maintaining those top line sales numbers. So partnerships like ours, it probably in a market that will see some level of consolidation become very critical for our merchant partners and how we can partner with them to continue to provide support on the top line sales, off the back of a stimulus fueled external environment, which they've had the benefit of for the last, 18 to 24 months. Things are, a little bit different with some of the headwinds they're facing as well.
For sure. And all of these changes have been packaged up into this refreshed strategy from Zip. It's not been isolated to Zip. Many of the players in the BNPL are really moving towards that pathway to profitability. Can you talk about the rationale behind it and how you guys are looking to move towards that at Zip, and also the results that you're seeing so far with them?
Yeah, so it's obviously no secret that we previously had a global growth strategy that really did deliver bottom line profits in the future once the business had reached a certain level of scale. And, due to the deterioration in the external environment and the change in the capital markets, we did need to adjust that strategy. It was very clear to us that, we needed to pare back our global cost footprint in light of that change. And so we really heavily leaned into the ANZ market, which is obviously already profitable for the last 4 years, and the US is the core drivers going forward for the business. So largely speaking, we've divested or wound down the remainder of our business, and we have seen some inflows from that. And we've also seen a significant reduction in cash burn resulting from those initiatives. So it became critical, I guess, to reset the US business with that accelerated path to profitability. So we had a very strong focus on unit economics, and that was more broadly across the group as well. But we've made significant improvements in credit losses, marginally increased revenue margins, which have really accelerated that US business's path to profitability at a slightly smaller scale than otherwise would have been the case. So we've made really strong progress on those initiatives. I think our quarterly results that were released a couple of weeks ago now, really did demonstrate the progress that we'd made, particularly with regard to unit economics and reducing that burn. So I think, largely speaking, we remain very well on the trajectory for group profitability in FY24. And, I think, broadly speaking, that was well recognised by the market.
For sure. And of course, the big news recently is the changes in the regulatory environment. Zipco, you put out the note yesterday saying that you welcome this. It aligns with kind of the recommendation and the focus that you guys had. Can you talk about why you think this is so important? And then secondly, why you think that this is so important as well from a Zipco perspective as well, and why you're best positioned to really take advantage of that?
Yeah, so we've always adopted a slightly higher standard and a different approach to credit since inception. I think that was a little bit more in the ethos that Larry and I wanted to approach the opportunity with. But we've really been advocating, fairly vocally for regulation for our space since about 2019 and the previous Senate inquiry that ran off the back of an ASIC process. So I think part of what we saw was, not only would it be a competitive advantage for regulation, but it would effectively take away a lot of noise that continually surrounds the sector. And I think this lack of regulation or the lack of clarity with regards to minimum standards from some of the other participants in market was seen as a detraction for the sector. And I think also from the investment side, lack of clarity about what future regulation might look like provided potentially a barrier for certain people to invest in the space. So we have been engaged with Treasury, for the last 18 months with regards to working through what potential frameworks for regulation might look like for the BNPL space. We really do applaud and support Minister Jones and the government for landing on option 2, which we believe is a sensible balance between, providing consumer protections and delivering minimum standards, but also, more importantly, I guess to some degree, from our perspective, not that they're not important, was it allows the continued promotion of competition and innovation. So effectively, under these changes, businesses will be required to hold an Australian credit licence. They will be forced to comply with a scalable version of responsible lending obligations. And effectively, that means understanding a customer's financial position and ensuring they're able to afford the repayments prior to providing your services. So given that we've had an Australian credit licence and have offered the regulated product in Zip Money since inception, we are pretty much undertaking all of those checks already for Zip Pay customers, which is our unregulated product. So largely speaking, it will be business as usual for us. So really well placed to continue our growth trajectory without there being any impediment from regulation. I think in terms of the broader market, there would obviously need to be some quite significant changes to the operating models of many of the competitors. We believe that there will be some level of consolidation once the finer details of this are ironed out, and how some of those competitors comply or withdraw from the market opens up an opportunity for Zip to increase its market share. So I think it's a very good outcome from the Zip perspective. But secondly, to the point that I addressed earlier, it actually provides clarity to the broader market about this is the pathway forward with regards to regulation. It does provide that clarity in terms of what was previously uncertain.
For sure. And it is an interesting one there. Obviously, we've talked about the divestment of the non-core markets that you've done. You've then talked about the potential for market consolidation here. Is that something that you are considering perhaps on a more local level if the opportunities for consolidation does come up with some of the other players?
Yeah, I'm not suggesting that we would need to make an acquisition to benefit from that. I think if you looked at our platform, we have almost 3 million customers already in terms of those that have activated an account at some stage. I don't believe that there's any material benefit that would be gained by, in terms of the acquisition. So I think it's more about the ability to increase market share, potentially. And I think, the growth trajectory for the stock standard BNPL remains, pretty strong, but the next level of step change growth might come from new products to existing customers, for example, as the business continues to mature in the Australian market.
For sure. And then just reflecting back on those recent results that you talked about, the top line continued to grow well, improvements on the cash transaction margin as well. Did you want to talk about some of the potential timelines that you'd be looking to move towards on that pathway to profitability and really those key milestones as well that investors should focus on?
Yeah, so we're really have been making very strong progress over the last 12 to 15 months since we adjusted the strategy. And as you touched on, some of the results in terms of how we've tweaked the margins that came out of our last results season was, particularly strong. So revenue was up, 15% year on year to 182 million, which was a really strong outcome off the back of transaction volume growth of just under 10%. So what we'd done there was, while we tempered some of our growth on the transaction volume side, just to offset the external environment, we had increased and improved our revenue margin off the back of some repricing and business mix shift, which was great. I think the highlight of the result, though, was the cash transaction margin improving to 2.8%, which was up from 2.5% year on year. So it shows the improvement, without any seasonality inputs. And the fact that we're able to increase that in a rising interest rate cost environment. So if you consider the cost increase every 25 basis points has on the Australian receivables, that was a very strong outcome. So I think it really demonstrated the control and the levers we have at our disposal. Obviously, the cash burn, the implied cash burn from the results improved significantly as well, and remain on track to do better than the previous half's result of the EBITDA loss of 33 million. So I think in terms of the next signpost, largely speaking, certainly all the analysts in the broader investor community, particularly our shareholders, do acknowledge that we are on the trajectory that we have stated, which is profitability in the first half of FY24. And I think the next goalpost or signpost, I beg your pardon, is probably the full year results, just to show that US business right on that break even on a sustainable basis, dragging the group into that cash flow positive territory.
And then I've got to ask you as well, of course, many of the technology names around the world have had significant downturns in terms of their share price. That's not the only focus that you guys are working on. There's so many things going on as well, but just some reflections on the share price. And what do you think investors are missing at this stage? Or what do you think they're waiting to see as well for this next little upturn potentially?
Yeah, I think they're probably waiting for two things. They're probably waiting for us to deliver our next component of the liability management exercise on the convertible bond. So we delivered a highly successful transaction in December, which retired 70 million of the liability at 23 cents in the dollar. I think we need to continue to make progress in terms of that liability management, demonstrating how we reduce that and how we manage that, and I think that's imminent. So that we look forward to continuing to make progress with regards to that. And I think so that would be one, and I think the second is actually hitting the profitability milestone. I think as we get closer to that mark and deal with the CB, there will be some catalysts for some improvement there with regards to the support. And I think having the regulatory piece out of the way in terms of one of the questions that had been constantly sort of leveled at either ourselves or the sector, obviously is very helpful as well.
And then finally, I guess, firstly, congratulations, because it's the 10th birthday that you've just had passed. That's a significant milestone. So congratulations for that.
Yeah, that's coming up. I think it's the 24th of June. So it's, you don't often reflect and think back on things, but it has gone pretty swiftly. That 10 years, I think, one of my daughters is 11. So that's all she ever known.
What an incredible milestone. Well, yeah, congratulations for that one. And then I wanted to ask, looking forward 5 years ahead, what does the future look like for Zipco as well as the BNPL sector? What are you thinking, on that aspirational time frame?
Yeah, so I think there's probably a little bit of rationalisation in a market like Australia, but I think we would have gone through the next iteration of step change growth and how we will emerge into a next generation financial services player. I think if you looked at the 2.5 million Aussie consumers that we currently have active on the platform, how do we support them with additional financial services that are served in a way that is better than the traditional players, and how we shift from pure play BNPL, which has obviously served as such a great acquisition model and win-win-win for ourselves, consumers and merchants, and how we shift into providing additional products and services and delivering significant step change growth with regards to receivables and revenue. And in a market like the US, I think you'll see probably roughly the similar amounts of participants in market, but I think you will have seen a more maturity reached with regards to product differentiation. So currently there's little differentiation with regards to go-to-market product on the consumer side. I think as the market matures, you'll see different participants in market adjust their product to take advantages of certain niches that present themselves in the same way that has done in Australia, to open up additional addressable opportunity. And the market sizes in WorldPay's estimation, will treble within the next 2.5 years. So there's obviously natural growth through time and maturity in market, but I think we look forward to innovating in terms of that product.
That is the Zipco story. It's ASX ZIP. Big thank you to Peter Gray, the co-founder and global chief operating officer, for joining us. Really enjoyed the conversation and look forward to catching up again soon.
Anytime. Pleasure. Thank you.
Thanks, mate.